the last targets in focus for this trading week, Martin McMahon, strategist and economist at Commonwealth Bank, discusses major currencies pairings Aussie dollar, dollar CAD and Aussie yen. Martin, today Aussie US dollar rose 0.10% to 0.96. Why do you think this happened, and what are your forecasts for Aussie dollar?
Well, there's been a near-term bounce in the Aussie earlier on in the session today. We think it's partly related to maybe some month-end Aussie dollar buying for funds to adjust hedge ratios. We also think there's some trimming of short positions. Obviously, the Aussie dollar has been under pressure over the past month and a half or so. Yesterday, there was a very positive second estimates of corporates' CapEx plans for 2013-2014. It's a very forward-looking survey, and it supports the RBA's view and our own view that the business investment outlook is not maybe quite as pessimistic as some of the market participants are currently talking about. We think that investment will be in a 12-month plateau rather than dipping back, and we think maybe some market participants were maybe responding to what they saw as a positive survey yesterday.
And yesterday the US dollar pulled back from highs against the Canadian dollar after the release of negative US economic data, which rocked speculation over whether the Federal Reserve will pull back its easing program as soon as June. With this in mind, what are your short, mid and long-term forecasts for the dollar CAD?
We think that dollar CAD is essentially going to be holding around these levels fairly stably over 3 and 12-month horizons. Most of this rally up for dollar CAD has really been about dollar strength rather than Canadian dollar weakness per se. There hasn't been any particularly innovative news from Canada recently. Bank of Canada's comfortably on hold at 1%, but that's no surprise there. We expect that to remain the case for at least another 12 to 18 months or so. There is an eventual tightening bias, but we think any rate hikes in Canada are at the second half of next year at the earliest. And the growth outlook in Canada does remain generally pretty decent, certainly by the standards in Europe, and also is reasonable relative to the US. So we don't see any big cyclical divergence emerging between the dollar or the Canadian dollar over the next 3 or 12 months. So we do think we'll see numbers slightly above parity for most of that period.
And today, Aussie yen jumped 0.49% to 97.81. What do you think caused this move, and what are your current forecasts for Aussie yen going forward?
Well, in terms of Aussie yen, the Aussie may have rallied a bit generally earlier in the session, as I mentioned, on the back of some trimming of short positions, although it has come under a bit of pressure since then. The yen story, we think, has got a long way to run in terms of softening up. This is a temporary bout of yen strength in an ongoing depreciation trend, and we do think that the yen will remain the major mover in currencies over the latter half of this year. It's obviously been the biggest mover over the first half of the year as well. We think dollar yen, for example, is going to head up to 110 or so by the end of the year. And the reasons are still fairly clear. The RB economics, ultra-loose monetary policy targeting lower yields, and there is an underlying collapse in Japan's current account surplus, which erodes the underlying support for the yen there. So we do think the yen's going to generally soften up, and we can see Aussie yen being up sort of around 113, 114 on a 12-month horizon.
That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Have a great weekend and goodbye for now.